minutes, but a good time also to get in some technical perspective. Kunal Bothra of LKP Securities joins in for a quick check on the market technicals. Thanks a lot for joining in, Kunal. Good afternoon. First up, what do you make of this move? Is it a relief rally or is it indicative of a move much further?
Good afternoon, Mangalam. Good afternoon, Reema. I think one of the more important indicators which I think a technical analyst at this point of time has to watch would be the RSI, and not the daily RSI. I think it's the weekly RSI. If you look at the historical scenarios of the 14-week RSI, whenever the RSI generally tends to enter into levels above or below 40, in terms of tendency of the market. So if you're in a bull market where so for the last 1.5 or 2 years, Nifty has been maintaining its longer-term uptrend. Levels just above 40 levels seems to be good entry points. Markets tendency for Nifty is that to try and break that 40-day moving average, and the moment it tries and comes back above the 40-day moving average on the rather the 14-week RSI, I think the tendency is for the Nifty to try and start a fresh uptrend. If you look at the historical prospects, look at August 2013 and August 2011, you had two similar points where the RSI for the weekly jumped below 40 and then it scaled back above 40 in just a matter of very small weeks. So I think in terms of potential, what we are looking at this point of time could be extremely strong, because if Nifty tries to continue its uptrend and the RSI maintains its trajectory, I sense that you can start a very strong fresh uptrend. So at this point of time, it doesn't look like a short-term rally. It still feels that I still feel that there is more to go, at least in terms of momentum for this market.
Okay, so there is more to go, at least on the upside. Hi Kunal, afternoon. Banks are clearly leading from the front. The Bank Nifty has a gain of 560 points. That's a rally of close to about 3.5%. Which would be the best placed bank to play this upside?
Well, I've picked up a couple of banks, but my sense, Reema, is that there seems to be now a tactical shift, in terms of where the markets is, or probably where the funds is trying to invest in terms of sectoral momentums. You don't see the IT and the pharma getting that much possibility of an upside, but I sense that many of these banking names, especially the private sector and the PSU banks, they seem to be forming a good chart pattern. They're holding on, even though they've seen sharper correction in the last two and a half odd weeks. So I think a couple of names which look attractive. The first one is DCB. The stock is holding pretty well above the 200-day moving average. Even at current perspective, it's managed to break a swing high. And I sense that looking at the volumes and the chart patterns as well as the indicators and oscillators, I expect that the stock can actually head towards its previous high. So I think from a short-term perspective, looking for a target of 145 on DCB, keeping a stop loss of 122 on it.
And Kunal, in the metal space, they've gained some traction over the last 15 odd days, and in fact, as we speak, JSL Stainless has also surged, currently trading with a gain of around 10%, trading at the day's high level. What would charts indicate as far as JSL Stainless is concerned, and any other mid-cap idea as far as metals are concerned?
Well, I don't track JSS Stainless, to a larger extent, Mangalam. But I think in terms of the other potentials, I expect JSW Steel to be one of the other few contenders which can actually look, quite promising from a longer-term chart perspective. The weekly chart has already confirmed the swing breakout. The stock is already heading above its 200-day moving average, which I think is again a very positive sign, especially looking at the kind of carnage you've seen over the last 1 year for the metal names. So I think, if I have to really pick one stock, out of the entire metal pack at this point, it would be JSW Steel.
Okay, in the mid-cap pack, you've also got a recommendation on PVR. Why is that?
Well, Reema, it's more to do with the longer-term chart patterns. I think if you look at the chart history for PVR over the last 3.5 odd years from 2013 on, I think there seems to be a pattern where the stock, after a rally goes into a period of consolidation. The consolidation lasts for at least 4 or 5 weeks, and once that consolidation gets over, the stock tendency is that with volumes it tries and continues its uptrend. I think you've seen a similar formation happening in PVR over the last 2.5 odd months from July onwards. The stock has been in a range, 850 and around 775 is the range for PVR, and I expect that if it crosses 850 this time around, it can actually start a very strong uptrend. So I think in terms of positional call or a breakout call, I think I would look to bet on PVR, keeping a target of at least 920 over the next couple of weeks, stop loss of 775.
All right, a positional call and a breakout call perhaps on Bank of Baroda as well, because that one's lost about 12.5% from the start of this year, but gained about 5% in this week itself.
Yes, Mangalam, and as I said, I think the exposure has to start increasing towards these rate sensitives, especially for the banks. And I think Bank of Baroda stands a very strong possibility. It's holding on to its 200 moving average. You're looking at the chart patterns as well, especially the weekly chart patterns. The weekly chart patterns are still intact, even after the correction which you saw in the last 2.5 odd weeks. So my sense, I think if the entire banking space has to move, if the market continues its momentum, I think pockets of these PSU names, especially Bank of Baroda, can start picking up significantly from here on. So I've kept a target which is very close to its previous high of around 206 on Bank of Baroda, keeping a stop loss of 178 on it.
Okay, Kunal, thanks so much for that. Any disclosures?
No personal holdings of the stocks mentioned. It is possible that I may have recommended the same stocks to our clients at LKP.
Thanks as always for joining in.